Have you ever wondered how the best intelligent investors really seem to do well out of picking the right stocks at the right time and make tremendous amounts of money off of particular stocks or in any market? And if you have, you've probably also familiar with the phrase that by the time you've heard about it, it's already too late. And this is something that a lot of retail investors or traders, people who go into the financial markets in a kind of uninitiated state, really struggle with. And in this video, I'm going to show you how one of the things that I'm looking at, and I'm going to be showing you an incredible tool and how I'm able to utilize this tool alongside some other analysis skills that I'm going to share with you in this video to really drill down and pick the right stocks at the right time. So let's get stuck in. All right, so as a stock investor, right now, it's actually like a bit of a kid in a candy store. There's quite a few really nice hidden gems, and I could go on. You know, one of the ones that I'm looking at is Pfizer, one's Johnson & Johnson. But in this video, I want to take a look at PayPal, and I'll show you why I personally think this is a hidden gem, and I'm going to talk you through some of my analysis and how I look to get involved myself in PayPal. And more importantly, timing the right entry, because a lot of people say it's about time in the market, not timing the market. Well, if you want to do really well from picking stocks, individual stocks, timing also is a good part of it, a big part of it, depending on your approach to investing. So you're all familiar with stock screeners if you're interested in picking stocks. I have a very structured approach on what I look for in my stock screeners. But most people, they come into the stock screener and they see these buy signals and they think, oh great, that's a buy, I'll just buy that, right? Well, that's not a wise approach for starters. So the first thing I want to share with you guys is Forecaster. Now you might have seen me use this in a previous video. You can go and get a discount on this. I'm a paying member of this, as you can see. I'm a Pioneer member, but I am a paying member. It says my subscription will be increased if I cancel and come back. But they did give me a discount for you guys who watch this channel. So if you use the link below, you'll get a discount on Forecaster. In my opinion, this tool has been a game changer for my investing. I've been investing for years and years, and this has really turned the heat up on my returns, and I'll show you why. So first thing I'm going to do is go to PayPal, right? So PayPal isn't really a, trendy stock right now. It's not something that people are talking about. It's not fashionable, right? It's considered quite a boring stock. And as I said at the beginning of this video, when you've heard about it, it's too late. And most of the intelligent investors are in at the right time, whereas most people who drive the hype or get in on the hype are in at the wrong time. And that's when you get shaken out, volatility and all that. And, you can never sustainably build a portfolio that way. So looking at the PayPal, first thing I want to share with you guys is the fundamentals. Now, two of the things that instantly stick out on this page, and what I love about this tool is it goes out to Bloomberg terminals, it collates data from stock screeners, it does all the maths behind the scenes. It also uses various different scoring systems and formulas to give you a more compelling case for picking a particular stock. And it's all done on a dashboard, like it's all visible on a dashboard, which is absolutely, game changing, particularly in a day and age where accessibility is there for everyone, and you need to be sharp. You need to be ahead of the game. So this just changes the game for me. But first thing you'll notice is a beautiful, right? What a great set of numbers, right? You can see the numbers are growing. You can see, more importantly, how undervalued this is. 137.6% below the fair value. And of course, you've got the Peter Lynch value here. Even that's, undervalued as well. So it's incredible, right? It looks great on the outside. If we dig a bit deeper, you can see the Petrosky score here, right? Which is good, a number 8. So this score shows us that it's outperforming relative to how it's performed in the past. So it's performing better. So when you start looking at that and you look at the price is going down, right? But the numbers are going up. That is the first indication that I'm going to start rubbing my palms together. Sip of coffee. If you want to take it a step further, you can look at the Benish M-score. And what the Benish M-score does is it indicates if the company's been manipulating its data on its earnings report, right? So Nvidia, for example, last year, they had put some funny numbers into the earnings report, which then threw up a high Benish score, which basically indicated that they were manipulating the earnings to boost the share price. And you can see that this is very low and it's unlikely to be manipulating its earnings. Now, if you check the Altman score, it's not the best, right? But if you do some further research on the company, which is all part of my quantitative and qualitative analysis process that I do in every stock when I'm looking at what the product is, how simple the product is, do I understand the product, I'm looking at the numbers, I'm looking at how they use the cash in the business. And you go a bit further and see what they're actually doing in the company. You can see that they've just got a new CEO who's doing great things. They've invested a lot of money in that, and they've invested a lot of money into AI. They're working with AI. They're still the number one intermediary for payment gateway across the world. So they're doing really great things. They're just not fashionable right now. They're not, people haven't got a buzz on PayPal right now. So they're not on the front eye of the average retail investor. No one's talking about them. That's why they're undervalued, because the numbers are going in the right direction. The price is going down because no one's looking at them. This is how you get an undervalued stock. So we've looked at the fundamentals. Now just take a look at the overbought, oversold tab up here. Now you see back in 2022, the price kind of stagnated around 72, and it started to get lower and lower and lower, putting in new lows and new lows and new lows. So the Wyckoff indicator here, you can see that we were started to put in
higher
lows. Now that's called a divergence, and when we see a divergence, it's basically a difference in what price is showing us and the transactional volume of the investors. And you can see whenever that happens, we're likely to see a rally, and I'll show you where that took place in another stock that springs to mind, which is Ferrari. You all know Ferrari. So Ferrari on the overbought, oversold tab, funnily enough, around the same time last year, you can see that we were putting in lower lows, and we started to stagnate, but actually we were putting in higher lows here until, of course, boom, we saw that skyrocket in the later part of 2022. And of course, 2023 was a phenomenal year, and going into 2024, even better. So once I've identified some pattern like this, what I then like to look at is the seasonality and sense check what history has taught us about the movement in price and when it's likely to move. And I'm going to show you how I drill down using seasonality and then look at a real chart for an actual entry on this, and how we can get an entry alignment on an actual trading chart to align with our analysis. So first of all, let's take a look at the seasonality. Now straight away, you can see that this is literally a live video. It's currently the 5th of March, 2024. And you can see here on the 8th of March, we're likely to see the 5-year low in price, right? Okay, happens to be, or the low in price happens to be on the 8th of March. Now, I just want to show you I want to add some confluence here. I'm going to add the 7-year, the 3-year even, and you can see that lows in price were around that same date, the 7th or the 8th of March, which is in 2 or 3 days' time. Okay, and then straight after that, what happens is we see a long bull run. Now all we need to do is go, right, okay, well that's a great position to get in, depending on what type of investor you are, whether you're going to add to your position over a number of months, whether you've got lump sum that you want to put in. This congruence and this confluence gives us a great indication that that's a perfect entry point, right? Timing the market. So now, if we go over to the PayPal chart and we start taking a look at the actual technical chart, you can see that we've been on a bearish downward move, right? And what we're looking for as traders now to pinpoint an entry is an entry signal. Now, some of you use exponential moving averages, some of you use pivot lines, some of you use support and resistance, whatever it is that you use. One of the things that we're seeing here right now is what we call an inverse head and shoulders formation, which is basically a reversal in trend. So you can see we've been putting in these new lows, new lows. But as we've put in this final new low, we failed to put in another new low. And what we've seen is this head and shoulders with a initial shoulder, then a perfect V-shape head pattern, and then a second shoulder, and then a break of the neckline. And we're hovering around that shoulder now, whether you consider this the shoulder or this the shoulder, a second shoulder in an inverse head and shoulders setup. What this tells us is what we're likely to do next is see a rally to the upside. So depending on what type of entry you use, this could be the way that you target that and really drill down on that entry point. Or if you're more of a kind of broad approach investor, you just start putting your money in next week, that could be you. Now, I want to take a moment to say none of this is a recommendation to buy PayPal. None of this is financial advice in any way whatsoever. I'm just showing you what I'm looking at and what I'm considering getting involved with, and giving you a bit of an insight in how I look to get involved with these particular setups and maximize my returns. Now, if you want to learn more about my approach to investing, you can go and check out all the links in the description below this video. But hopefully you got something from that and it opened your eyes to just how predictable markets are, because I think not a lot of people quite appreciate how predictable markets are. All right, so hopefully you enjoyed that and it opened your eyes a little bit to really how these successful traders and investors actually approach the market. And if you're interested in learning more about this, or you want to see more videos like this, please consider subscribing and definitely leave me a comment to let me know that you enjoyed this and you'd like to see more. And of course, you can always join my communities and everything. That all the links are down in the description. And until next time, thanks for watching. Until then, take care, have a great rest of your day, and I'll see you then.